Whether you're just starting trading or you're already experienced, you've probably heard the word liquidity mentioned before. And in this video, I'm going to be going over what it is and how you can use it to take better trades and improve your trading overall. So, to start, what is liquidity? Well, liquidity is just, put simply, it's just where orders are able to be filled. So your orders are filled by a liquidity provider. So someone like Citadel Securities or any other liquidity provider, right, that takes both sides of the trade. So they'll sell you and they'll buy to you. And this is what this is. Up here, where you see it says buy and sell, that's the market makers, right? These are the people that provide liquidity into the market. So you're always able to buy and you're always able to sell. And the spread is just what they're willing to sell at versus what they're willing to buy at, right? So that's liquidity in its most basic form. But in relation to trading and in the market, right, how we use liquidity is where institutions, right, that have these huge orders that need to get filled, right, this is where they're able to fill their orders, right? So let's say an institution wants to go short. Well, they have to sell to someone. They have to sell their shorts to somebody, right? So when you're short selling, you're just selling the shares right away. Well, someone has to sell all those, has to buy all those shares, right? Well, to sell, right, they have to take out buy stops, right? And where are buy stops resting? Well, generally, right, if I'm going short and I take a short from right here, where am I going to set my buy stop? I'm going to set my buy stop above this high, right? I might target here, right? I might target lower, right? Where am I going to set my buy stop? Above this high. So that means that if everyone is setting their buy stop above this high, where are the market makers and the people that want to get their huge orders filled? Where are they going to target? Well, they're going to target this high right here to be able to fill their orders. And here is a perfect example, right? We see liquidity resting above here. We see price draw it onto here, draw back up to this area of liquidity, sweep this liquidity, and then continue lower, right? So this is where you can anticipate a reversal, right? So there's two types of liquidity within the market. There's buy side and sell side. The easiest way to remember this, when you're buying, right, you want price to go up, and when you're selling, you want price to go down. Buy side liquidity is where you're able to get out of a long trade or a buy side trade, right? So buy side is on the top and sell side is the opposite. Sell side liquidity is on the bottom. So in this example right here, we have buy side liquidity resting above this high, and we have sell side liquidity resting below this low. As you can see right here, right? I just explained how market took out buy side liquidity up here and going to continue lower. And if we want a sell side example, right, we see sell side liquidity resting below here. We sweep this sell side liquidity and then trade higher, right? So that's how liquidity affects the market. So how are you going to use liquidity to take trades? Well, when you're looking for a trade, what do you want to look for first? You're trying to catch these moves, right? You're not trying to catch these small moves. You're trying to catch these moves. Well, you want to identify areas of liquidity and then take trades from there, right? So if you're looking for these areas of liquidity to get taken out, you want to look for PD arrays that are, within or past these areas of liquidity. So if you're looking for a short from here, right? I think I took this trade, right? If you're looking for a short within here, what are you going to look for? You're going to look for a sweep of this high, right? That's your first confluence to take a trade. So you get a sweep of this high. Now you can look for an inversion. You can look for a fair value gap. You can look for an order block. Whatever you're looking for, once you get this sweep, this is your first confirmation that price wants to trade lower, right? So what is the other type of liquidity that I mentioned previously that you're going to be looking for when you're looking for trades? Well, it would be session liquidity. And the easiest way to see this is you can use a indicator, right, to mark out the sessions for you. And what do we see here? We see London session here. We see New York AM here. We see Asia session here, right? What do we see from market here? Well, we see London session liquidity is here. We see London session highs are here. And then we see manipulation out of this range. So what does this mean? London highs were swept here. So what does this tell us? That means that if we're looking for an AMD model, right, and I can cover this in more detail later, right, but if we're looking for an AMD model, we have accumulation here, right, our accumulation is here. We sweep the session high, right, so this is not just a relative high or a predominant high, this is a session high, right, so this is London session. We get a sweep of London highs here, a second sweep of this prominent high here. So this is our confirmation. This is a sweep of London highs, right? We trade back into the London range. We sweep the highs. We continue lower. So this would be our confirmation that we want to look bearish and we want to take bearish trades, right? So our first confluence can be we trade out of London. We trade out of the London range. We manipulate out and we trade lower, right? So that's the easiest way to find session liquidity. Right, we have Asia session here, right? We sweep Asia highs here. We sweep London highs, right? So this is already a sweep of both sessions, right? So this is a sweep of previous day sessions, right? And we continue lower. If we go back to the previous day, we get sweep of London highs, trade lower. Right, and if we go on a higher time frame, it's going to be even easier to see this. We get a sweep of London highs here, right? So this is our manipulation out of the range, and then we continue lower. So this is how you can use session liquidity as a confluence to take your trades, right? So what do we go over? What do we cover? Liquidity is resting above predominant highs and lows, and the market needs to take out these predominant highs or lows to trade in the other direction, and this is how you can identify where you want to be entering your trades from. So that's going to be it. This is a more simple concept, but it is definitely useful to learn very early on. So if you guys have questions about it, or if this video was helpful, let me know in the comments. If you guys need to learn anything else, if you guys are struggling with anything, if there's anything I cover more in depth, if there's anything I did good, if there's anything I did bad. But yeah, with that being said, that's today's video. Probably going to cover another concept in tomorrow's video, but yeah, that's going to be it.